Hello and welcome, and it is about 7:41 p.m. Eastern Time, Crypto Day, the 23rd of May, 2018. I'd like to welcome you again to yet another video. The chart on the screen has two lines, an orange and a blue line. The orange line represents the start of the year 2017, when the price was $950 for Bitcoin, and buying about $12,000 worth and doing nothing. So it's basically the Bitcoin chart. The blue line, well, that's being a little fancy, trying to overperform the market, and it's underperforming it thus far. Well, what it's doing is whenever the price action goes up 11.5% from the last trade, it automatically will do that of sell. And it will sell, I think it was 8%. I worked it out so that it would barely, so that you don't sell out and it's a small advantage towards you. Every trade you make, you're always going to get a little bit of extra Bitcoin on the play and a little bit of extra fiat currency. Now, what happens when you do trades like this is when your market you're playing against overperforms the base, then just sitting around and holding will have extra gains like this. On declines, well, this would go through the blue line once this goes deep enough. Now, the reason for this is with the blue line, this started off taking about 9,500, buying 10 Bitcoin to start, which was $9,500 with the blue line, leaving $2,500 back to trade with. Never did need it. And therefore, when this was rising up with like 11 and change Bitcoin. And what happens when this is going up, that means the Bitcoin amount that you would have would go lower and lower and lower. You keep selling and selling. You'd have 10, then you'd have 9, 8, 7, 6, or so on. So when the prices increase, when you see how much your 5 or 6 Bitcoin are worth, plus the amount of fiat currency you have, that's where you would stand. And then you take the 11 Bitcoin you have, multiply that higher price, that's why it's going to be worth more. But on the price declines, now you're starting to talk about having 11 Bitcoins going down 20% over a period of time. And that of like maybe 7 Bitcoins going down that same percentage, it won't go down as fast. So thus, this would have to cross below the blue line on the declines. A measure of this is a protectionary measure within your base currency. This way, if the price just ends up collapsing so bad, you're actually going to survive the situation okay, because you're going to have the extra currency. And then if your base, and then if the underlying or the market you're playing, in this case Bitcoin, goes way up, you're only going to get a percentage of those gains, because when it goes up 20 times, you were selling at 1.5 times and 2 times and 3 times and 4 times and so on. Or you've seen your X amount of Bitcoin be 1/5 that amount, or some much, much lower number, simply because of the fact that, well, because of the trading. Let's take a look at this a little further. I'm going to remove the lines on here and add new ones. What I'm going to do is I'm going to draw a line from the current price action to the first time it got there. So thus we are at this point here. I'm going to do the same thing within this low. Well, that didn't stay straight. Now what we can notice is that price action for the one that's holding on is back to this recent point's peak. Yet here, it is above such. So by doing all these trades and protecting yourself from down markets, you have managed to have it so that you are in a little bit better shape than from where you, of course, before, just because of the buying and selling that you have done. Let's take a look at the data on the spreadsheet to show you how it would look in numbers, that is. And this is the spreadsheet that I am using, which has 2-hour time frame data starting, I guess, December 31st at midnight, with the closing price at 950. So I got all the data in here. The start was with BTC. So the last trade, the last trade was the first trade, 950.18, assuming you would buy on the open. So with the sell order, what this is it takes the last trade and it multiplies it by 1.115. So it's looking for an 11.5% gain. And to buy back, I'm looking for the price to drop 10%, which is last trade multiply 0.9. So then I asked the computer to look for those numbers. Basically, that's where your buy and sell orders would be. So whenever the price increases or surpasses above or below these numbers, then that means your buy order or sell order would hit. So therefore, I figured out the formulas in here. This is a situation where a sell order would hit, the buy order, that I was able to put all the formulas in needed, and it would automatically put in all the trades and do the data that I would need. But the numbers in here are the ones I'm going to be focusing on, because it started with 10 Bitcoin and $2,500 to trade. So at this stage, you'd have 11 Bitcoin and $1,600. So what we're looking at is when the price first reaches the 7,500 level that we are at now. So we got 2,000, and here we're reaching 7,500 here. So the first time we get there, in fact, it hit it. I'm looking for a closing basis one right here. This is 75.47. That's a pretty good one, because I think that's close to where the data I got for this as the last price. So in here, you would have over $26,000 and 2.68 Bitcoin. So you've already sold 3/4 of the amount of Bitcoin you've had by doing this. And you have more currency than you started with at this point, starting with 12,000. But let's just see where you'd be now for Bitcoin and currency at today's prices. Let's scroll to the bottom. Ooh, that's a lot more. 3.68 and 23,000. Doing so with a price of 75.67. So you managed to increase your Bitcoin total, your overall portfolio, as of course shown within the chart. And of course, as far as I know, the only 3 ways that I can think of you doing an event such like this, and it doesn't matter if it's Bitcoin, Litecoin, or whichever currency you're talking about, but the point of doing this, again, is to protect yourself from this thing collapsing and making sure that you can at least build that cash bankroll as you've seen within, and at least if it goes down to nothing, when you see that the HODL line goes way lower, you're somewhat safer. Well, number one, you can play the tether game. And number two, you can play the new one, the true US dollar. It's pretty much the same thing. The concern there is both within the actual coin itself, if it's going to always work and it's always going to be in par with the actual price of Bitcoin and the dollar, as well of just being on exchanges. So far, during this entire time, any trading one has needed to do for the tether against this has always been fine. So you're just playing like it will still continue to be so, but that's obviously one of the risks for playing it. Another one is playing within actual fiat currencies, like on places like Gemini and Coinbase and what else have you. Of course, that's a situation I am not going to be ever getting into, but that is just another one way in which it can be done. When you do stuff like that, then you really risk missing out on enormous gains, as we can see. This got close to $250,000. Well, this one got like to over 70,000. So basically a 12x versus what was a 5x. Okay, next I'm going to talk about the Bitcoin decline and mixed feelings that I currently have. For I realize the markets need to be volatile to be able to profit from such. And I look at this as, man, this can be an enormous opportunity. First off, earlier, about a week ago, I sold XBY at the price point of 692 Satoshi. I sold 4,000 of them. After selling them, I ended up selling it to the Bitcoin, that is, to the Tether. The Tether, it was in at 83.50, I think, or 83.20. Somewhere over 8,300. Today, I ended up making the buyback. I ended up buying the XBY at I think around 535, but I ended up selling or buying the Tether back into Bitcoin at about 7,500 and change, 7,550. Well, it worked out that with the price of XBY, I was able to get back about 5,800 of them, or plus 1,800. That's almost a 50% increase. That's pretty darn near good. Now, I'm looking to be buying more. Now, with XBY, let's first explain that, and then explain how my strategy is continuing within such. As I've been waiting for the price to decline to a break below 600, which it did. And let's just put this at 1,000 up here. Then the price got to the point where you could buy it for a day. Then it went up to here, and well, now it's back down here. The buying for me occurred. Again, I needed to break below this line, and it happened here. I'm looking to be buying at these lower prices if, of course, they arrive. Did a little bit of selling in here, buying back. Of course, I did my last buyback just now. And I thought, well, I could wait lower for a buyback price. But then I thought, what's the point? I plan on buying this in intervals. Normally, I'm not a big fan of buying back when it comes back to key levels. But it's a buyback. It's a small entry. So that's why playing small would work. If I was not in XBY and it's something I wanted to be in, I would enter in now and then look to buy as the prices go cheaper. And I'd be using the strategy I'm going to be talking about to get those buys later on. Of course, it's not as good to do so now as it was as I started, but let me just make it so you can see everything. But this is what I did as I noticed, okay, Bitcoin's going down. So what's going to probably happen if Bitcoin goes down? Altcoins together will all go down as well against Bitcoin. So if I got some Bitcoin here ready to buy, instead of just having it sit and wait, why not short what I'm ready to buy? And then after I cover the short or buy the Bitcoin back on the tether, I will then turn it into XBY. For what? Let me just remove all the drawings on here. I'm going to play this with buy orders ready already in Bitcoin, but I'm looking to get more. I got buy orders ready in at the 400s and at the 200s, like 220 or something, like some around 400, some around 225. And I got other buy orders on CoinFalcon as well. I can't remember. I think that's 400. So I got 3 buy orders ready to go. So therefore, I've decided back when the prices were around 8,300 BTC. Well, let's take some Litecoin. Let's take some Bitcoin. Well, in this case, for where I got on Cryptopia, I took Litecoin. Sold the Litecoin on the market against the Tether. I did so at the price of 130 something, $130 and something, 135 I think. And then when I'm ready to buy, and I got a buy order ready to fill at 6,000. I'm not ready. I don't see it yet at this point. But if Bitcoin goes down to 6, I've already made the profit on the trade. It'll execute. And even if the price of XBY were to stay the same, I'd be getting a better deal on it because I'll get more Bitcoin than I had before. But now let's just assume XBY, which is currently around 530 or 50 or something, it goes down a lot, but Bitcoin doesn't go down quite, at least it doesn't go down to 6,000. Say Bitcoin goes down to, say, or XBY goes down to 375. Now I already have Bitcoin to buy, so I could be like, I could wait. But what one plan might be is if, say, this has fallen from 75 and say it's 66.50, then I might be ready to take some, or all of it that I have on Cryptopia anyway, buy Bitcoin, and then buy XBY. And technically speaking, if I'm buying this at 66.50, that would be a differential of about 1,600 points. So you could almost make a case that I'm buying this at around 300 or a little under, whatever the math would work out to. Because the differential of me taking, say, whatever, for every one Bitcoin unit that I have, I'm now going to be able to buy like 1.3-ish or so. So I'll get more in return. So I'm pretty excited about the potential for what may exist. Now, around the same time, I was putting the sell order in from that Litecoin trade. I did so on Binance as well. I showed that I put a portfolio. I had 0.24 Bitcoin, almost 0.238-ish or so that I deposited in there. I ended up selling it all. It went down to 0.22, so I lost about 9%. And when the price was 8,300-ish, again, I'm almost all this is around 83, 83.50. I ended up buying the Tether. And then the price went up a bit. And then it went back down to pretty much 83.50. And I'm like, oh my goodness, this thing is really looking to break down. So I deposited some Bitcoin. I deposited some Litecoin. I sold it off for the Tether. It's got a much larger size bankroll than what it was. So now the way I look at this is some of this is being bought back at $6,000. And the other part at $3,000. On the situation of this being executed, this gives me more funds to buy more XBY, possibly. I could move it to Cryptopia very easily. And of course, it'll only be a portion of it, because I'm going to explain more. But I got an okay amount available towards it. I wouldn't even deposit. I'd be happy to bring like 0.08 to buy. That'd be an amazing buy to add. And of course, I added to this number, and I would be worth more with the price lower. And I want to build up a nice Binance account. I don't know if I'm going to buy some other alts that are on there, like normal against Bitcoin, or actually trade the coins against the fiat on that site and play maybe the TUSD, and by the time I sell this, it's in Tether. I could change it, but what's the point? But just keep on trading codes against such. I don't know, it's an idea, but that is what I've done within that site. And before I get into my strategy of what I plan on doing if I get the event of these buy orders filling on the Tether, let's talk about poker. So if you are not familiar with the game, please bear with me here. Obviously, if you are, I'll give you an interesting strategy to say why I would make this play. And then go over it as an example for the crypto. Now let's just assume that I'm at a cash game and I'm playing normal 100 big blind buy-in and 1/10 and 1/5 Litecoin blinds. That would be really fun. That means I'd be playing with 20 Litecoins. I would do so, but only if I realized that the game was legit. And I'd rather play for 10 though. And the game was legit, and I was really confident I can outplay my opponents. If I was really confident, I'd love playing for 20. But this play here, this is purely mathematical. And it requires a little bit more information on, well, really, all the players. But when you're sitting at the table, you're getting to see it. If you're playing on the internet and you've played many hands with it, you get to have an idea on how players play, because that does mean a lot within it. So I'll go over the if the styles of a person matches, I would do it, and then the mathematics upon the play. So I have a hand like 5-7 of clubs. I like this better with suited type of connected cards like this that does not include an ace, unless it's pocket aces, but or even ace king for this matter too. But you're also looking for hands that if you get called with an all-in, you're going to have a little bit of value. But let's just assume you're at a 10-player table, you're in the big blind, so you're position number 10. And position 3 raises to 70, I was going to say 70 cents, but 3.5 times the blind. The person beside that player calls. Position 8, which would be the button, 3 bets it to 1.8, and the small blind calls. Now, if the person in early position is a normal raiser, this is what you'd normally want to see. If you see a passive player calling here who plays a lot of hands, which is very common, then that would pass the bill. And then you have position 8 raising. You want this to be a very aggressive player that is capable of folding. And in this one here, you want a little bit of match from someone like number 4, someone who's not willing to go all in with hands like King Jack and all those other, and pocket 3s and all those other ones that you're not doing the greatest against. But someone, again, who's potentially able to lay it down. So you go all in for 20 Litecoin or 20 units. How much is the pot? Well, if the pot started off with 0.7 raise and a call, that means there'd be 1.4 in there. And then we have 2 people putting in 3.6, 2.4 plus 3.6 is 5. And really 5.2 when you include the Litecoin you put in. But we'll just use 5 for simple math. You're putting in 20. So right off the bat, you are making a proposition bet. The prop bet is such: I am betting 20 units to win 5, that the action of me going all in will make you all fold. If I win, then I get 5 units. If I lose, well, I have to see a flop. But I could still win. So let's look at this math even further. Because when getting called, I would expect to get called by hands like aces, kings, ace, king, and so forth. But you're not going to get called too often. You're going to get a lot of folds when you do this play. You will be 38% against hands like ace, king suited. But overpairs are a killer. A lot of hands are barely under 20%, but the suited cards, getting a straight can help you out a little bit. And hands like 5-6 suited are a little bit better for this play as well. If they have a pair, 60% of the time that you get called. And they have like an ace, king, ace, queen, the other ones, it's going to be about 28% of the time you get called, you're going to win. That's not good, of course. That's bad odds, especially when you're getting close to even odds on the all-in. If you factor offsuited ace, king, and even pairs, I'm going to basically go 30%. So if I play this 10 times, I'm going to expect to win 3 and lose 7. Now, I'm going to win about 24 or so Litecoin, because I'm going to win 20 by the person that called me. But there's also about 4 Litecoin in dead pots with all the raises that was going on pre-flop. So 24 multiplied 3 would be about 72. But within the 70 losses, I'm going to lose all my Litecoin each time. So 20 times 7 is 140. Subtract the 2 in 10 situations, I'd be down about 70 Litecoin. So 70 Litecoin divided by 10 is 7. Per call, I'm losing 7 Litecoin when this happens. And I'm trying to win 5 on this play. I was doing 20 to win 5. So therefore, when I lose, I'm actually putting up 7 to 5 odds. So that means as long as my opponents fold 58.3% of the time, then I'm going to win. Now let's assume that they fold 75% of the time. That means my one win would give me that of, my one loss. I would lose 7 Litecoin. But my 3 wins would be 5 times 3, which is 15. That would be plus 8 over 4 turns, plus 2 per play. So I think about things like this. I had a lot of experience, and I did a lot of preparation beforehand, the homework, if you will, to understand these plays. Now, a little bit of a hint is if you have decent stacks, if you're playing like spots where your all-in bet is big, but not like, okay, somebody raises it to like, say, like 18 and you go to 200. If you can go from like, say, a raise of like, say the blinds are 1 and 2, it goes raised to 5, someone raises it to 15. Now, if you can go an all-in play for like 90 to 120, which this works out well in tournaments, the math is actually very spectacular within such. Also, if you hear people, say you're playing on the table with someone like Phil Hellmuth, who, and a lot of these other pros who believe that you don't want to go broke early. Well, they only will seem to go all in unless they have aces in this spot. So if you know that that's one of the key players at the table, especially if you can get a read on them that they don't have such, then you know you can make this play and it would be very successful long term. After all, I look at the first day of the tournament very differently. I don't start with many chips and I got to build them, and I got And I got to be very aggressive and look for the best possible situations to do so. And in poker tournaments, if you're able to accumulate chips, you can do some damage. And I'm looking at the same way with not only XBY, but building other altcoins I can get when I see that there's times to buy them, of course. But what I'm doing is I'm using a situation of like this poker where I had a lot of experience and I did the numbers towards it. So I realize that it works out. And here, I got a lot of experience over this trading over the last year, and I was disappointed with how well I could have done or how much more outstanding it could have been. It's almost like having a spot where, like in football, you throw like 34 or 40 touchdowns in a season and you think you could have threw 60. That's the way I kind of feel with my trading of it. Although I felt I probably, using NFL standards, felt I could have threw 70. But if the price goes down to the point and I'm able to accumulate these chips and have the prices go down to 250, 350, all these lower levels, the damage that I can do when this comes back to the upside with that kind of stack actually kind of excites me, because this is like a game for me. And I've mentioned this so many times. All of this whole trading thing is a game. But I was able to sell so many of them at great prices. And then, of course, just all the little trades along the way that I feel if I can get a large amount of them at these sick low prices, that as this goes to previous levels of 3K to 5K and beyond, that the amount of swing trading along the way and arbitraging I can do in the meantime, by the time it gets there, well, those profit potentials could be outstanding. I've learned from my mistakes. Just really be, and now this is what I wanted to go with, because this is what I thought when I went to the poker analogy. When you make a poker move like I talked about, you got to have guts, you got to have confidence, and you just got to execute a very aggressive, smart strategy. That's what I have to tell myself, is just go out there and execute it. The fact that I was able to put these positions in to decent amounts is pretty good. So I'm happy that I've done that. I did very well waiting below for the prices first to get below 600, not buy at 800 and 900 and all those other numbers that were north of such. And the game plan that I would have, of course, is when you notice the key levels and you see it within the charts, because the sale, all the last 2 or 3, 4 sells that I made, you could just tell, I could just tell rather, that the price was going to go lower. And I made bigger sell orders than I normally would have, and it worked out for me. So when I see these situations and it's later on and say the price is at 1150 and it's working out well for me, and I see, oh my goodness, this thing is looking pretty sharp to sell off now. Oh, I see this, this, and that. And I've seen a lot of XBY in the past and other cryptos to understand when these situations come up. And especially lately, I've been feeling it so well that if I just aggressively play upon those strategies more, and this is the code I want to do so within, I got a very aggressive level, then just go ahead and do it. So I'd see and care, okay, sell. So maybe I'd sell a good amount, a safe, large amount. And when I say safe, large amount, large enough that it can be very profitable for the buyback, but safe that if it keeps going higher, I'll still have good amounts to play with. So you'd make the sale, do whatever. Maybe it's like it is now. You see Bitcoin going down. You execute the same thing where you buy the Tether or the true US dollar, wait for both to go down and then do the buyback. Or if you're not sure, you think Bitcoin's going up, hold it in Bitcoin. And then if you're right, and oftentimes I have been in spots like this and I see the price, oh, it's 822. I figured it was going to sell off. Let's buy it back. So that's basically it. Learn from everything that you have done. And what things did you do that were magnificent? And how can you make that magnificent more magnificent? And when things could have been much, much better, when you look back at it, especially after it happens, you got to say to yourself, okay, let's look back 3 days ago or 3 weeks ago or whatnot. How can I seen that a particular event would have happened? And if you can say to yourself, yeah, because of this situation that I seen here, it doesn't surprise me that whatever occurred. And when that happens, and then the future occurs, and a situation like that comes up, you're able to recognize it and then act upon such. The game of poker has taught me a lot about different things like this. So it also helps, of course, feeling that when you understand volatility of your bankroll, and it can be wild swings, you control your volatility, of course, in poker, that you get used to the poker moves as such. I'm going to finish this off with risk-reward bankroll management is job number 1. And I'm going to explain a story of something I do not recommend to people. This is back in the poker bankroll days. And my bankroll was pretty decent at the time. I mean, I wanted it to be a lot higher, but it was a lot higher for my entry. Again, not starting with much. And I had a bad day. A lot of bad luck. And even a little bit of tilting. Something I don't really do. But I ended up losing. I'm trying to think of the number in my head right now for what I lost. Something like 22 to 25% of my portfolio I lost in one day, or a combination of two. So what you don't do is you don't go to an online blackjack table. And I'm just going to think of the numbers in my head for what I played. And I think it was somewhere around 25% of my remaining bankroll for like 10 blackjack bets. So 2.5% of my bankroll per blackjack bet. Thankfully, I won about 9 or 10 units, and I was able to get some of my losses back. But I could have lost a lot more, and had I done so, I probably would have tilted a little bit. And games like poker are self-controlling in the sense that you can decide how much you risk. And for me, the way I would play it, at least towards the end, is that I could buy into a poker tournament of 1% of my bankroll consistently. Now and again, you can splurge and do 2 to 4%. Keyword on splurging is that if it wins, well, then you can manage your bankroll increasing from there. And if it loses, you don't make a play that big until your bankroll grows higher. And then for cash games, it would work out to the same thing as far as this 1%. I would, 2% really, 2% I did. I would buy in for up to 2% of my bankroll in a cash game. So if I had, say, $10,000, that means I would play the $1, $2 game for $200. Okay, thank you for tuning in. And yeah, this is more of like a trading, bankroll management kind of video. Also talk about the strategy. And there's one more thing, yeah, because Binance. I think I talked about this. I'm thinking about trading it more aggressively if I get my my buy orders filled against the Bitcoin. And I hope they don't, just because I like to see Bitcoin go way higher. But I kind of hope I do, because like I say, mixed reactions. I feel if this correction can come, the volatility that I can profit from can be pretty decent. Okay. Have yourself a great day. Bye-bye.